My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. My friends, I'm just trying to make a little money. My job is not just to entertain, but to put things in context and teach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Sometimes a rally will fizzle simply because there's no more good news to propel things. And that's how I felt today when the averages gave up the ghost on some not-so-hot new data points, with the Dow sinking 389 points, the S&P tumbling 1.22%, and the Nasdaq plunging 1.56%. Those disappointments put the rally on ice, at least for the moment. Now, I regard it as simple profit-taking, but I get that this is a market that needs endless beats and raises from the companies that report. And the two that reported last night, and they were important, Adobe and Lennar, didn't give us world-beating quarters or outlooks, even as I found both quarters well executed and delivered. Now, let's turn to next week's game plan. We have got one of the strangest weeks of the year coming up because there's an overwhelming sense that the Fed's on hold, not raising rates next week. So I have to be the only one who's worried about what Jay Powell will say when the chairman speaks on Wednesday after the next big meeting. Now, I make that point because I'm simply not seeing enough evidence that inflation's been tamed to where Powell would have to change the language he uses. Right now, he's at cross purposes with the bulls. Powell's much more worried about stopping inflation than he is about preserving earnings or jobs or corporate balance sheets or consumer spending, for that matter. He has to swim against the tide and talk about whether inflation's still trending lower, an argument that gets harder to make as oil goes higher and higher, right? See, the price of crude has snuck up to $90, and by the way, it seems headed to $100, where the sky-high cost of fuel might get embedded into the whole system. I don't know if that's enough to change the Fed's actions, but it's clearly enough to change Jay Powell's words, gives him more reason to stay hawkish in his statement and the following Q&A session, which I dread so much. I'm not negating everything else that's happening because there's plenty that's going right, but I do get worried when no one else seems to be afraid of an upcoming Fed meeting where our central bank could end up taking a harder line than most people expect, and that will send the market lower. So what's coming beyond the Fed? For a long time, we loved the booming travel and leisure space, one of the best ways to make money in a post-pandemic atmosphere. Although now that there are worries, and the worries are that whole move could be threatened. Hey, look, we just had many airlines pre-announce negative numbers. That does say that travel is slowing. How bad could it get? Well, Disney hosts a very important theme park-oriented investor meeting in Orlando at the theme park on Monday, and that might shine some lights on a division that's actually going gangbusters, especially in China, and nobody's talking about it. Theme parks are a bonanza for Disney. I expect them to be more resilient than the rest of travel and leisure. And by the way, have you been to a Netflix theme park? I don't recall any. Disney makes a fortune on theirs. What else? Oh, everyone is so petrified that Disney have to pay an arm and a leg to Comcast, our parent company, to buy the remaining stake of Hulu. I think Disney's strong enough to afford it, and they've got plenty of cash. One reason we own the stock for my charitable trust. That said, I'd like to hear some clarity on their ESPN strategy, maybe some outside investors, I don't know. And if there's anything in these stories about how they might be selling ABC to Nexstar, I don't think there's really anything to it. Again, if Disney were as desperate as the bears make it sound, I'd be telling Investing Club members to be much more concerned. And I'm not doing that, though. In fact, we actually bought some more Disney stock right here at these levels for the trust. To me, Disney's about to play offense, and it starts Monday in Orlando. How about boating as the expensive leisure option, made even more expensive by skyrocketing gas prices? The cost issue will come up at Monday's Brunswick investment meeting. The cost of filling up my Brunswick brand Boston whalers going through the roof. Here's a company that thought boats had been de-cyclicalized. Yes, that's a term for how they're not as cyclical in the past, and that was post-COVID, but it didn't happen. They had a pandemic boom that's not extending into the post-pandemic era. I thought it would. I worry Brunswick may have to take numbers down again. On Monday night, we might get the pricing of the Instacart deal. That's an IPO. It's a very convenient way to shop, although it seemed a heck of a lot better a few years ago. Something that's obvious when you look at what amounts to be a big down round in their financing. I believe Instacart's taking advantage of the beautiful halo from the ARM deal yesterday. do you want to own this one? I don't recommend it. If you want to play the Instacart IPO, I got a better way. I'd much rather buy the stock of Goldman Sachs, which is a lead underwriter. It also played a big role in the ARM deal. They're getting a piece of the upcoming Birkenstock IPO, which can be very big, by the way. Underwriting is Goldman's real stock in trade. And after 18 months of quiet, the burner's finally back on. Finally, we should get our best read on iPhone pre-orders Monday. Already we're hearing the stories of much better than expected demand. You know what I say? I say own Apple, don't trade it. On Tuesday, we hear from AutoZone. Now, this is one of the best-kept secrets in the business. They've been buying back massive quantities of stock for years. While we know that Advanced Auto Parts has had a tough time lately, I think these two have parted ways in terms of execution. AutoZone is much better, which is why they dominate the do-it-yourself space. You got my blessing to buy some before it reports on Tuesday, then buy more later if the stock sells off, because they'll be in there buying it back soon enough. Wednesday is the fulcrum day next week. It's where the market's biggest themes will all come together. It starts with General Mills, the food company that has been leading in sales but faltered badly last quarter. Can Mills turn it around? It's not easy when their high-end pet food business, Blue Buffalo, seems to have stalled. It didn't help that Zoetis said pet spending slowing earlier this week. That's the pet med company. Then we have the Fed itself front and center with the possibility of a harder line than people expect. Surprises are unwelcome to the bull camp right now. The bulls believe that the Fed's work is almost done. I certainly hope that's true, but I hope it shouldn't be part of the equation. It's very hard to believe that they're through with oil at $90 a barrel. After the close, we need to see if KB Home can get the group out of a newfound margin-related funk brought on by last night's Lennar quarter. The Fed wants to see more homes selling at cheaper prices. We need to know whether the Fed's work is succeeding. If they're truly winning the war against inflation, it's bad news for home builders. More on that later. Finally, we get the much-anticipated FedEx earnings. And just like the Adobe last night, I'm worried that even the best quarter won't be enough to send the stock higher. We know it should be a fantastic quarter as FedEx took share from UPS out of fear that the latter might be closed by a strike. But that's looking like a one-time only situation now that UPS has cut a deal with the Teamsters Union. I expect a beat-and-raise quarter that nevertheless causes FedEx stock perhaps to sell off. Are people still going out? Are people still spending money, spending fortunes doing so? Why don't we look at Darden, that's the owner of Olive Garden, to find out when it reports on Thursday. It'd be a huge deal if they still have good numbers, given that the others in the cohort seem to have stalled out. I like the stock, but not enough to buy for the Chapel Trust. Hey, speaking of the trust, wow, yes, club meeting, most attended thing that we do, 12 noon next Thursday. I would love for you to join the club and hear what we have to say. We being Jeff Marks, my colleague at the Investing Club. And then finally, Friday will be 1 week for the auto strike. How long can this thing last? It's possible we get some resolution, but it sure seems like UAW's Sean Fain wants to drag this out. That may not be good. The bottom for the whole economy. But the bottom line, when there's a Fed meeting coming up in less than a week and nobody seems worried about it, maybe you want to brace yourself for a little turbulence. How about Tyler in California? Tyler.
Hey, big booyah from California. How you doing, Jim?
I am doing well. Booyah to you.
Booyah. So, quick question for you.
Yeah.
I found out my son has type 1 diabetes and uses the Dexcom G6. And my entire family actually has diabetes. So I wanted to ask you about Dexcom, DXCM.
Sure. Well, first, man, I'm sorry about the results there. That's a tough verdict. Dexcom is a company that does really well when, sadly, diabetes is booming. People feel that the drugs that come, these really interesting drugs from Lilly and Novo will cut down diabetes. And I have to tell you, I agree with them. That's why there's been a little on Dexcom stock, and I want to be careful there. It's down a lot, but I still want to be careful. How about Sonny in Massachusetts? Sonny.
Hey, Dr. Chill, from one doctor to another, thanks for everything. I'm a new club member because I got tired of hearing my friend make a ton of money through the club. I'm here listening with my 9-year-old son, who is a huge fan.
Booyah, Jim!
That kid's got horse sense. Terrific.
My question is on Enphase. With oil prices going up and a tempting entry point, are they currently a buy, and will they make me money?
I keep thinking that they will, but the problem is people keep saying that, you know what, with interest rates this high, it's a financing play, and the financing's too expensive. I suggest if you really want to directly play the correlation, you do it with First Solar, even up here. Now, and thank you for this nice words. It seems that everyone's overlooking the Fed meeting coming up next week, but I think you should buckle up for some unexpected turbulence right into it. On Mad Money tonight, a major security breach took down the computer systems at MGM in Las Vegas. So how does something like this happen? And what do we need to know about threats like that in the future? I'm running through the latest with the CEO of cybersecurity firm Okta. Then, for the first time in 30 years, NFL Sunday Ticket, which allows you to watch all out-of-market football games, has made its way to Alphabet's YouTube. So what does this mean for Alphabet's bottom line, if anything? I'll give you my take. And earlier this month, I sat down, this week, I sat down with the CEO of autonomous vehicle company Cruise in the back of their driverless vehicle. I'm sharing part 2 of our first of its kind interview. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.